I'm Priscilla Barrera with the Investing News Network, and here with me today is Trevor Raymond, Director of Research at the World Platinum Investment Council. Trevor, thank you so much for joining us today.
Thanks, Priscilla. It's a pleasure to be here.
All right, so we're here at the Sprott Show in Vancouver. What is your main takeaway so far?
So I think it's always good to come to a conference where people care about natural resources, and this is pretty much a strongly gold territory. So many people that own gold obviously have a tendency to consider platinum, and it's quite an opportunity for us. So it's nice to be here and see a lot of gold investors, and many of them that don't own platinum. So for us, it's a great opportunity.
All right, so let's talk about platinum. Has the market performed as you expected at the start of the year? Any surprises?
So we've been around for 3 years, and what we do is we provide a forecast out a year. We're forecasting the current market to be in surplus for this year. The first quarter of the year was a bit more promising, but no surprises. I think we've had 5 consecutive deficits that have been ignored largely by the market, and the surplus that we've got is smaller than it was forecast last year. So this year's looking a little better than we thought at the start.
Right, so talking specifically about demand, what factors have been impacting platinum demand, and do you expect that to continue in the second half? Will we see demand go up, down, remain stable?
Good question. I think the demand for platinum is in 4 segments. Firstly, automotive, secondly, jewelry, thirdly, industrial, and then finally, investment. Obviously, the investment demand is what we're trying to increase. Automotive demand, there's a sort of a shadow that hangs over it because of the diesel issues in Europe. What we have seen is despite the very, very negative sentiment and the drop in diesel car sales, there still has been not as much of a decline in platinum demand for automotive use. So that's been higher than expected. Jewelry sales, China remains depressed, but India is looking quite prospective. In fact, jewelry sales in India are up double digit again. So very, very interesting there. And then industrial tends to be a reflection of economic growth around the world, more things that are needed, more platinum used in industrial applications. But I suppose this year there's a large strength in the industrial demand, mainly because of some recycling in Japan that occurred last year, and that's largely over. So industrial is looking particularly strong this year.
All right, and can you share your thoughts specifically on investment demand? Is that going to go up? What are you seeing right now in the market?
Okay, well, it's my day job to make sure that it does go up. But what we've seen is that there's been some redemptions out of ETFs. ETFs are more visible immediately. We've published our results on the first quarter up to the end of March, and there were some ETF redemptions, but there was strong buying in bars and coins. What we still have is strong buying in the Japanese market. So the Japanese market is the most mature physical market. They've been buying bar and coins in that market for a very long time. So bar demand seems firm, which is kind of natural at the low price. ETF demand fairly stable, but still being affected by the anti-diesel sentiment. So I think the low price, largely linked to the gold price, has made some investors become a little bit wary. But on the flip side of that, we're engaging more institutional funds around the world, and we have noticed large institutional purchases more recently. So it's quite encouraging to see that people are recognizing this as an opportunity more than just a sort of a dip in the price related to gold.
Right, and there's a lot of talk about the use of platinum in fuel cells that are used in electric cars. What are your thoughts on that? Is demand going to increase in that sector?
So I think what's been encouraging in the last few months is that there's been a greater recognition that the fuel cell vehicle is actually likely to happen. There's been a lot of skeptics saying the fuel cell vehicle won't happen, it'll be battery, and almost suggesting that there either will be battery or fuel cell. What we think has become more apparent is that if you look at a battery vehicle and you look at a fuel cell vehicle, about 80% of the platform is identical. And right now in the world, I think there's over 300 battery electric vehicle models available. Penetration hasn't gone up much from about 0.8% to 1.2%. So those battery vehicles aren't really making money and aren't penetrating. However, all the massive investment that's gone into them has boosted the fuel cell platform. And the only difference between the two is the hydrogen tank and the fuel cell. So it's been quite encouraging that more people are recognizing that the future mix in the powertrain will contain a lot of battery vehicles, but it certainly will contain fuel cell vehicles. And you only need 6% of your vehicles on the road to be fuel cell to almost double automotive demand for platinum, an extra 3 million ounces. So I think that recognition is been quite welcomed, that people are starting to realize that certainly fuel cell vehicles will make up future demand. And then just in terms of the overall global fuel cell market, I think the estimate was about 40,000 ounces last year from Johnson Matthey, and that could be as high as 70 or 90,000 ounces this year and next year. So I think although fuel cells are very small, the amount of ounces is encouraging. And we think heavy-duty vehicles, there's a drayage vehicle that uses fuel cells to transport containers to warehouses. And in some of the US ports, there's 100,000 trips a day in poor air quality. So we think putting hydrogen in a port and heavy-duty trucks will drive the platinum demand, and that the fuel cell electric vehicle, the cars, will follow suit.
Okay, and looking over to supply, is there any specific geographical areas where we will see supply increase this year, or we will continue to see a supply decline in platinum?
So good question. So in terms of supply, over 73% comes from South Africa, Southern Africa. Between South Africa and Zimbabwe, it's nearly 80%. And remember, the rest of the platinum supplied around the world is largely as a byproduct, byproduct of nickel in Russia and a byproduct of palladium in North America. And those production tend to be fairly stable. So the nickel market, so the nickel price is stable, and that output from Russia, very low-cost ore body, is stable. So no changes outside. South Africa has, remember, declined in 10 years from over 5.2 million ounces a year to 4.2 million ounces a year. So the reasons behind that decline in South Africa are largely the rising real costs. Labour is 60% of costs, and it's going up by more than inflation, and significant capital underinvestment in those mining operations. So we don't forecast more than a year out. The forecast for this year is lower production than last year, but it does appear that it's constrained supply and difficult to produce in South Africa.
Right, and in terms of platinum prices, what have you seen so far, and what is your outlook for the rest of the year?
So platinum is undervalued in our opinion. If you have to go back to compare platinum to gold, you need to go back to the 1980s to find a point where platinum was this cheap against gold. It doesn't seem appropriate. The other thing is that it's cheap against itself. Last time that platinum was at these price levels, it nearly doubled on 2 occasions. What we do see is that most people are still tending to ignore the fundamentals of this market and are trading on sentiment. And a lot of the trading is linked to the gold price. So if you look over the last few weeks, some significant dips in the gold price, those same dips in the gold price were mirrored almost identically in the platinum market. So I think at the moment, our job is to get more people to recognize this metal and value it on its fundamentals. But at the moment, we are finding that the current low prices are unrelated to fundamentals. So the opportunity is to see the fundamentals being recognized again.
Right, and my last question for you today, for the investors that are watching us. In your opinion, what is the one mistake they should try to avoid if they're interested in jumping into the precious metals market?
Okay, so we're not regulated, so we can't give investment advice, just to make sure for your viewers. But I think the important thing is to sift out the difference between sentiment and fundamentals. We publish, as Johnson Matthey has since 1975, supply-demand fundamentals. Have a good look at them, look at what Johnson Matthey publishes. There's a lot more information. We think we're trying to make this market clearer and more easy to understand. So I think do your homework, look at it thoroughly, but be aware that sentiment and the gold price are definitely influencing factors. And as we know in all commodity markets, fundamentals tend to win through in the longer term.
All right, Trevor, thank you so much for joining us today.
Thank you, Priscilla. It's been a pleasure being here. Thank you.
Once again, I'm Priscilla Barrera with the Investing News Network, and this is Trevor Raymond, Director of Research at the World Platinum Investment Council.